What's going on, people? Anonymous Trader here, bringing my fourth video to mastering technicals with myself. This one's going to be on the Fibonacci, mainly the 618 and the 66, which I call the Champions channel. Just I've called that from the group I previously learned it from. But yeah, this is a tool that I use on the. I'm going to show an example on the high time frame, but majority of the time I use it on the lower time frame, like I'd say the 4 hour and below, and it acts as a level of, like, if you're trading the trend. So say that we're putting in lower highs and higher lows, your CC would be where that higher low or that lower high target would be, or the higher high, whatever the trend is. In this case, I'm going to show you showing you how we're looking to trade this. Once again, I'm going to pop up a little, my throat kind of hurts right now, I won't lie. But I'm going to pop up a little pop-up here on what you should be taking away from this video. This one might not be essentially too long, just going over the one Fibonacci setting. But once again, with all this, you're going to want to watch my previous videos, because this is all going to entail into one at the end on how to trade with all the confluence and what is giving us our highest probability setups, what setups do I like the most, what's my biggest confluence, what's my best confluence, etc., etc. But looking at the Fibonacci here, this tool is found right here. Where is that here? I'm just going to pull it. There's like thousands of different settings that you can do. It's literally impossible. But what we're looking at right here is just the 066 and the 618. And for the terms of this video, I will pull on the full fib, which would be this. So the 0 and the 1 are just the low and the high that you're pulling it from. And then the 786 would be essentially a level to be just a little bit weary of. But now that I'm actually thinking about it, I really just want to go over the 0.66 and 618. So if you need to get your Fibonacci pulled out, get those settings pulled out as well. And then, yeah, let's get into it. I'm going to obviously show you right now pulling these without any extra confluence, just straight, just using these Fibonacci's. If you go back into the previous videos, you can incorporate all the extra confluence that you should have. Ranges, you should have just general market structure, and you should have levels. And now we're going to have the Fibonacci. If you have any questions, make sure you join my Discord. If you can't get in that, just engage with my content on YouTube, engage with it on Instagram. I'll send you an invite. It is a private invite only, free Discord, and there is unlimited sauce in here. I'll just go through and show you quick. Tons of PDFs. I got a candlestick Bible, some news outlets to be aware of for news. Then we got the basics. I got a Notion right here on the basics to leverage trading, brokers, like fundamentals, just mindset things. You got the links to my YouTube. Then you got tons of PDF content. Like, it's a very small Discord right now, but I do expect it to grow as I get bigger. But yeah, so getting into the CCs, essentially what you're doing with these is you're pulling them from high to lows and low to highs of your current market structure. So in the case of this, we would have the high put in, and I'm going to pull it to the. I'm going to show you this low first, okay? Okay, so originally putting in our high up here. Now we're gonna pull that CC Fibonacci from the high to the low that is locally put in. So pretend that it hasn't even came up here just yet. And this is what you're looking for to take trades. And we all know that we are shorting highs and longing lows. So you have to be aware of where the market is sitting. And at this point in time, we are sitting at a high. And we are looking for that change of market structure, as we just taken that local low, and we would be looking for a price to retrace back into making a lower low, and then, or a lower high, sorry, and then that's where we look to short. And what with these 6.6 and 6.18 levels do, it's called like the golden pocket or whatever. This is essentially your prime area to be taking sells with the stop loss above this high. So with identifying this low, identifying this high, we've pulled the trend now, and now we're awaiting a setup such as this. Let's see. Obviously, for me, I'd be targeting this first level of support down here. I wouldn't just be looking to take it to this low. as that's not too probable, as it did go to that low. But from a trader's perspective, you got to be pretty smart in how you're taking entries. For me, sometimes I do stop loss above this high, sometimes I do stop loss above this high. It really all depends where the market's sitting, and at this point it's at the high, so like I would have put it above this just to give myself a little leeway. And then boom, that's the entry that we would have taken on this, and this is without any extra levels. I know for a fact at the point in time I did have a range as well here, and if you didn't watch this video, go watch this range. We had a level here. That would have been my level of take profit, as it's the previous level of confluence, and there's a lot of support there, resistance, whatever. But yeah, so that would have been, that's one example of the Fibonacci right there. It's actually a perfect example. Let me get rid of you. So not only with that, so now not only with this high, and we have this little setup, we're gonna have this pull here from, again, the high to this low. Okay, so now we have this high to this low, giving us this triple top up here, acting as a very strong level of resistance. At first we didn't have that though, so what we can look at here is boom. Let's look. So from this low to this high, now this is where we're gonna pull. Okay, so we're pulling that. Originally it would be pulled for that, waiting for that first initial, but I'm just gonna pull it across because it did act as a thing. I'm gonna show you how we would know when a CC gets invalid. So for one of these levels to be invalidated, what would have to happen is essentially, so looking at the one that we originally pulled, it is, I'm gonna erase it as I go and show you just to give you the prime example. So until actually this high or the low that you pulled it from is actually taken, this CC is still valid. So as it did take this low, this Fibonacci is no longer valid, and we can get rid of that. And then what we got here is this pull from this high to this low, giving us this level right here. Boom, 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 boom. Okay. And essentially, until this low is taken or this high is taken, this level is still our level to be trading. We're taking shorts based off of this and acting as resistance. If the level is to break out and flip to support, obviously that's a little bit more of a higher risk setup because you're longing a high and not shorting a high. But that's not that it couldn't play. If the market is overall bullish and we are heading up for higher, the chances of that pumping are pretty high. But in this case, that we are putting in new lows on the chart, so we have identified the change in market structure, and we would be looking for that lower high to be put in, which has been put in here quite nicely. So off your first initial tap, you would have had sells from up here. If you didn't want to take your first one, you would have had boom. You would have had your reaction down, all the way down. What happened here is the CC reclaimed. You would now can pull, which I already pulled, this Fibonacci from your low to your high, giving us this level of support and or resistance, whatever. At this rate, we're putting in this little consolidation phase. So as we know, until for this Fibonacci, until this low is taken and or this high, this level here is still good. And I'm going to show you how perfectly this played out. And essentially, being a trader, we're shorting highs and we're longing lows. So we got the opportunity to short 4 highs here, great confluence shorts, and we got the opportunity to long 2 lows. We got the pump to the short, boom down to the initial back test here to put in that sideways consolidation before making our next move. Then what happened again? We came back up, came back down, came back up. Now, you can see that none of these levels have been invalidated. We haven't taken the highs. We haven't taken the lows. We haven't taken that high, and that low is the same. So this level of, the range that we're trading right now is very strong. That's a strong range. Now we can look to short our highs and long our lows for the breakout. So you want to be long from the low to catch the pump, or you want to be short from the high to catch the dump, okay? And essentially, this was the high I shorted. I had mentioned this in a different video, but I'm not going to go over that right now. I'm going to stick with the CCs. And it's just a perfect example here on how the confluence played out. So you're not shorting down here, and you're not longing up here. You're doing the opposite, as we're trying to have the highest probability trade. And longing the highs is not probable, and shorting the lows is not probable. What we wait for to be able to short something like this is what happened here perfectly. So as you can see, from this high, we've made this initial down move, boom, came down, actually taken the low, and with candle closure below this. We're not shorting this just yet though, okay? Even if it does the dump, you want to be in it from there. You are not front running that, because what happened here is a perfect back test, and this is how you would trade. You would flip your buys to shorts on this, as we've put in this local consolidation phase down here, okay? Claiming the level, or not claiming the level, but losing the level as support. And then what has happened here? The level has not taken this low yet, so this Fibonacci is still valid. This Fibonacci is still valid as well, because the lows have not been taken, okay? So now we still have strong levels of confluence. What has happened, if we can just pull this fib a bit more over, boom, okay? So instead of acting as support and taking a buy now, this level has been lost, consolidation. We've back tested it as resistance. And as we do not have acceptance back into this range, we're not looking for longs from here. Shorting is obviously not the, it's not the highest probability short, but it's a higher probability short than shorting down here. And if you're not short from here, now this is your second entry to get in this short, to now take this to new lows, okay? We've now identified new lows. Both those Fibonacci's now, with the low being taken here, are no longer valid, okay? So regardless of the fact of what other confluence was up there, I know there was more confluence zones up there, but I'm just showing you the Fibonacci. So that low was taken. Now those Fibonacci's are no longer valid. Now what Fibonacci would be valid here? So now we're looking. We now have this new high. Put this guy in right here. Boom. We have a local Fibonacci here. And we have a local, oh my bad. We have a local CC here. Boom, 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 boom. Okay. Now, giving us another local range to be trading. It's not as big as this one, but it is still a range. And essentially, what has happened here, and I've already showed you that we've had, my videos, you should, actually wait, that was a different video. My bad. So within this, I don't want to go too much into different confluence, but if you haven't watched my other videos, you already know that we've had tons of confluence within here. We've had ranges. Not that range. We've had ranges, we've had trends, we've had actual levels of confluence. That's a very strong level for us to be shorting, and I did call that one in the Discord. If you're not in that, you're already missing out. But regardless of the fact of that, extra confluence is like once all these videos are done, and I can include all the confluence levels, everything's really going to click together, but I'm trying to break down each individual one. So essentially here, what we'd be looking for is shorting the highs and longing the lows. As you can see, we've given 3 nice shorts, a couple nice longs, probably like 3 or 4 nice buys, okay? And what we'd look at here is as we're at a low, we're at a new low on the chart, we're not looking to short this. What we look for is price either to close below on the higher time frame, maybe even take this low. Then, or actually no, we wouldn't want it to take that low, because that could have liquid to pump. I'd say consolidate around here, then get that back test, and then we could look to scale into shorts. If you missed that original short from here, me being short from here, I really didn't have to take on that short. But then essentially, well, if that short is not given, we're also looking for this. If we don't get that candle closure outside here, we're looking for this to reclaim back into the CC, then we'd look to buy this back up to the top of the range. As it's at a low, we have a higher probability buying down here than we do of selling. You either want to be, once again, short from the highs and long from the lows, all right? And essentially, if you do miss the short here and it does dump, that's okay. Now we just have to have our levels, and we're going to await some new levels, await a proper low to be buying and or selling, or not a low to be selling, but you know what I mean. But essentially, after you have all these CCs and you understand the CCs, you're going to be able to, with your levels, with your ranges, you're going to be able to pull multiple different levels of confluence, and you're going to be able to have a stronger bias. And when more confluence lines up with something, when you have more confluence in an area, so like we do here, I have the daily, the Fibonacci, the point of control and the trend, like for me, that's a solid level of confluence to short. And or if we do get that acceptance, I'm long from these lows already, and boom, we get that acceptance, I can maybe look to taking that buy. You just want to be trading, and then we'd short from these highs. And yeah, that's pretty much it for the Fibonacci's on the local time frame and the Fibonacci's in general. I kind of want to go over quickly that they can be used on higher time frames. Like I personally have had a Fibonacci pulled. Let me see. Like I have this Fibonacci here. This is a daily or a weekly, whatever. It's literally from the low of Bitcoin to the high, and I've had this. You believe it or not, I've had this CC pulled literally when the price was at 50,000, and we had not even hit this low yet, because my mentor had actually shown me this. So really and honestly, looking at this Fibonacci right now, like this is crazy respect. I have not only used this as a take profit down here, but I've used this as an area of a target price for these highs that we've originally put in. From down here in these lows, I was looking for this CC, because I've literally had it marked for over a year. But now coming into more locally, we can see like we're not longing or we're not looking to short these lows. Obviously now with this level of with this CC, I feel even better now about not longing this low, or no, I'm not shorting this low here. And as you can see, we long the lows of the CC and we short the highs. It would, oh, dude, now this actually would make so much sense. Oh, if we can get that back test up to there, and then dump. But yeah, essentially that's the Fibonacci's. Once again, if you got any questions, don't be afraid to ask. Join the Discord, watch the YouTube videos, and let's start to make some money together, people, because there's very few people in this market that I see today that are doing things right, doing things honestly. Everyone's just lost. No one's got the actual perception on how to trade, and it fucking kills me. But that's all right. Hope you guys enjoy your day. That's the Fibonacci's. We out, baby.